All right, let me begin by saying hello and welcome to each and every one of you. It is Doug here with the all new and improved Trade with Doug. Boy, that still sounds weird saying it. It's sort of like when you start out each year, like when you go to January of 2021, and for the entire month, you're still going to be writing January of 2020. Like it takes you a whole month or so to forget about 2020. At least it's that way for me. That's how I feel about the Lincoln List, switching to Trade with Doug. I just want to say the Lincoln List. Anyway, welcome to Stock Market Mutterings for the 7th of December. I hope your month is off to a good start. As always, my promise to you is to take a grope in the murkiness, try to make some sense out of the stock market, which sometimes can be an enormously gargantuan style challenge, but I will do my best to grope here in this murkiness and try to provide you guys with some quality trade setups. As always, if you need help, make sure you visit the link that's on the screen. Trade with me live in the regular trade room. Join the part-time trader program, up almost 60% this year. The links will be either in the description box or on this screen. So let's begin with the SPY as always. And this is the almighty relentless one himself. The market just does not really care, does it, guys? I mean, it just keeps on going. Sector rotation, no rotation, money rotate. This thing's green every day, it seems like. And, you know, it doesn't seem to matter. Like, even with the Qs being green almost every single day, we're like on a 9 to 10 day run here. And it's like you have like Friday's action where you had the big marquee names from the NASDAQ. You had like Amazon, Facebook, Netflix, all red, Q's green. The markets just work independently of everything. Now, there's certainly no doubt overstretched here, at least for the short term. But as always with trading, it's not up to us, and none of us anywhere in the world have the talent to pick the exact tops and bottoms of something. Rallies can always extend much further than people want to think. Selling can always last a lot longer than more people think. Every time is always different, they say, or this time is different. It's just the way the market works. So, you know, we're on a 9-day streak. I don't know right now what might come along at this point in the year that will change what we're experiencing. We had payroll numbers last week. You have manufacturing. None of these knocked the cover off the ball, but it didn't make a difference. And I think what you're seeing here is the market is pricing in this epic recovery that we're all going to go back to work and everything is just going to be all good like it was before in February or March with a vaccine. Now, I'll reserve judgment on that right now. You guys go ahead and make your own judgment on that, but that's what this market's currently pricing in. We will see what happens in the future. So if we continue to see this melt and this grind, and how you really can tell is if you just look at the intraday action, there isn't any really selling. I'm going to go to this top chart. I mean, you got like a flush here. I don't know if this just come by just to keep you awake for a couple of minutes, but that's what you're getting. Other than that, you really don't have any real selling. And if it does, it's just like this. It just gets picked right back up. So until you can get something that really can build and really extend itself, it's just going to continue this way. I'd look to each and every whole number up top. So I would think you're probably going to see SPY 375, maybe 380. You're probably going to see, let's see, the Qs, I would think 310s, maybe 315s. And, you know, the Dow is now over 30,000 here now, 30,216. And that's what I've kind of been talking about. When I originally brought this up a couple of weeks ago to short it, that's what we had talked about is we really needed a parabolic panic buy sort of blow off top. We haven't got it. We're over 30,000, but we still don't have the panic blow off top. You've got to get something that really looks like what you had back here, where you had a lot. Let me see if I can open up that chart there for you guys, where you really had a lot of parabolic kind of action here, where you're getting tall stretched candles. We don't have that. This is just methodical, straight up sort of buying. So it is what it is until it is not. Now let's break it down and kind of look for some individual names. And I want to try to dig in the dirt here to try to find some charts that look like they still have a little bit of value to them that could provide us with some trades. As I always say in these, Every day of the week, you can find a trade on Tesla, Roku, Nvidia, Netflix, Facebook, Apple. You'll always find a trade there. There's always a trade to be made in those names, so they should always be on the watch list. T-Doc. Let's start with T-Doc here. You got a pretty good, let's say, got a nice little wedge kind of forming upward, channeling up. Looks a lot like the chart as what we have seen here in Peloton, but it hasn't quite exploded and kind of blown up to the upside. I think you got a little bit of room moving you up to the 207s, and I would look to accumulate this off of dips. So if you kind of look at what you had here on Wednesday, let's actually back it up and see what we're talking about here. This is what I'm talking about, accumulating on dips. You had a pretty good flush on there early Monday that provided you with a nice, really nice bounce off of support. Kind of a long fade, didn't really make a bounce till late in the day on Tuesday. Wednesday's a good look here where it just drops real quick and does the old customary check mark pattern, just like that. And then straight up there again Thursday and straight up again Friday. So I'd be looking at trades like this where you might be able to pick up some intraday flushes. You know, something, you can tell the difference. When you get the stronger panic flushes, you get the stronger bounces. When you get this chop and fade slow stuff, it takes a little while. So maybe you can find some trades within that. Now, let's say you're a swing trader and somebody wants to hold this for a few days. I think you can just put a stop right underneath of the trend line. Down here in the 189s, you can go into this practically right now. You've got very little risk on the table. And I'd be targeting 210 to possibly 231. The thing is once these things get going and they break range, they just don't stop. And a good example of that is DEC. Right here, where you're just kind of sitting still for a while, and then as soon as it breaks the range right here, you just go parabolic and the chase is on, and you get this really, really strong vertical move out of that. So I'd kind of be looking at T-Doc to probably break out of that range, just like I mentioned. It looks like Peloton. Peloton's another one here that is also walking up the trend line. I talk about this one all the time, except for I will say this about Peloton. The behavior of this now is much different than what we saw just a couple of weeks ago, where it was sort of consistent in its grind and consistent in its movement. It's been kind of erratic lately. It's not been able to really just kind of cling to its up moves. We saw that as well with Baba. So I kind of like this T-Doc here. I want to put that one on the list for this week. Now, another one I want to go back to that I haven't really talked much about is DocU. Let me open up the daily chart here with DocU. Now, the thing with DocU is it kind of got left behind over here in this last little rally. And yes, it moved up a good bit, but compared to the way some of these other trades have looked and the way some of these other stocks have performed, it's definitely a little bit different. So what happened here is you obviously have earnings that came out. They were perceived to be very good, I should say. You got a nice parabolic move out of the stock. It's a little too big right now to chase it. I shouldn't say too big in the stock price. What I mean by that is you've had a couple of paras here, and when you get out of something that has earnings and it gets parabolic, it's not a good idea to chase that under any circumstance. Normally, I like to let these things settle in for a few days. But if this thing does that Monday, Tuesday, builds a good base or shows some strength again, I think this is something that can make it back to the original 290s and maybe 300s. So ever since, September came around with the initial correction, not just initial sell-off in these names, and then followed by the vaccine news that we had in November, this stock has never really been able to get out of its own way. It's not what it was prior to that. So understandably so. Remember, it was just a $40, $50 stock to start the year, $60 in March, runs to the 300, just a lot like ZM. So maybe what I'm saying here is there's a chance this thing really, really consolidates and puts in a nice move. Now, what we also talked about last week was Netflix. And I'll tell you what, here's another thing about behaviors in stocks and the way these things are working. It started out real well. It broke that range, and I took this trade. And I tell you what, the rest of the week after that, it was a dud. It hasn't done anything at all. I mean, maybe there's another run up in this thing, but I kind of expected that once it broke range, it would click off some parabolics, very much like I showed you back there with DEC. Hasn't quite done that yet. So keep an eye on that. Also, I had given out Roku back then, and this one was what we were talking about. Maybe DocU is a good example of this. is that once you get them out of earnings, then they can start to run again. And that's what happened here. Once it got out of earnings, you had a little mess to deal with, but once it started running again, it really started to put together some days. So I kind of expect DocU to start looking like this relatively soon. So if I go through this real quick, first of all, markets super stupendously, ludicrously, ignorantality, it's not a word, bullish, really bullish. And until you can get some consistent selling, it is what it is until it is not. Looking at some value stocks, I like the daily charts in TDoc and Peloton. I like the way they look now for just accumulating some short-term trades on dips. Those actually look pretty decent for a swing. The next order of business is really paying attention to DocU because it didn't perform as well as I thought it would last month. Now that it's come out of really good earnings, you might start to see some good movement in that name. So keep that one right up there. And you always have something in Roku. You always have something in Facebook. You always have something in these names. So anyway, guys, thanks for watching the Market Mutterings. Don't forget about the part-time trader program. If you're looking for swing trading and shorter term investments, and if you're into the day trading, visit us at the trading room. All the links will be down in the description. Trade well this week, guys. Take care. Talk to you then.